Have you ever stopped to think about how a company in Brazil can sell millions of dollars worth of coffee to a cafe in Japan that they've never even met? I mean, how does that work? It's all built on trust, but here's the twist. The trust isn't really between the people, it's in a process. Today we're going to pull back the curtain on the letter of credit, an absolutely foundational tool that acts as an ironclad promise, making almost all of global trade even possible.
All right, so at its heart, the problem is actually pretty simple to understand. International trade, it's not just a simple purchase. It's a really high-stakes handshake across thousands of miles, different legal systems, and clashing currencies. And it all just boils down to one fundamental question: who do you trust?
I mean, seriously, put yourself in their shoes for a second. If you're the one selling, you want to know you're getting paid. If you're the one buying, you of course want to make sure you get your goods. But you can't just look the other person in the eye when there's a huge amount of money on the line. And that creates this massive chasm of uncertainty. It's a classic standoff.
And this standoff, it creates two very real, very legitimate fears. You've got the exporter over here thinking, okay, so if I load all my stuff onto a giant ship and send it halfway across the planet, what's my guarantee I'll ever see a single penny? And at the exact same time, the importer is thinking, wait a minute, if I wire all this cash to some company I've never met, what stops them from just taking the money and running? Both are completely valid concerns that can just stop a deal dead in its tracks.
So this is where a really, truly elegant financial tool enters the picture. To break this deadlock, the world of trade finance came up with something that replaces that squishy personal trust with cold, hard institutional certainty. It's a bank's promise that steps right into the middle of that risky handshake.
And here it is, the letter of credit, or what you'll often hear called an LC. Now, at its core, this isn't just some flimsy piece of paper. It is a definite undertaking. That's a fancy way of saying it's a rock-solid commitment from a bank. The bank is basically telling the seller, look, you do your part, you give us the exact right paperwork, and we guarantee you get paid. The buyer, they're no longer your main risk. It's kind of like having a trusted referee step onto the field to oversee the whole game.
Let's make this even simpler. Think about it like a secure digital lockbox. First, the buyer goes to their bank and says, hey, can you set up this lockbox for me? That's the LC. Then, the bank sends a message to the seller saying, don't worry, the money is right here waiting for you. So, the seller ships the goods, and in return, they get a set of keys. These are the critical documents, like the bill of lading. The seller takes those keys, gives them to the bank, proves they did their job, and boom, the bank unlocks the payment. It's this beautiful step-by-step process where nobody has to take a blind leap of faith.
Now, to really get why this is so powerful, let's look at it from the seller's point of view. For them, it is all about one thing and one thing only: getting paid. The letter of credit completely changes the game for them. Here's how. First off, they get a payment that's guaranteed by a major bank, not just some company they found online. That's huge. Second, this promise is what's called irrevocable, meaning the buyer can't just wake up one day and say, nah, I changed my mind, and cancel it. It also helps with political risk. You know, if the buyer's country suddenly has some kind of crisis, the bank's promise is usually still good. And finally, with that LC in hand, the seller can go to their own bank and get a loan to actually produce the goods in the first place. It's a total game changer.
So here's the bottom line for the seller. This is the whole thing right here. The entire risk of not getting paid gets lifted off the shoulders of the buyer, that stranger, and placed squarely on a regulated, trusted bank. And that is the confidence they need to load up a ship and send it sailing across the world.
But okay, this isn't a one-way street. What's in it for the buyer? Why would they want to do this? Well, for them, it's about gaining a massive amount of control and confidence, which is exactly what you need to start dealing with new suppliers you've never worked with before.
For the buyer, the benefits are all about being in the driver's seat. They know their money isn't going anywhere until the seller presents the exact documents they asked for. That proves the goods were shipped on time, maybe even past inspection. This gives them incredible control. It also opens up the entire globe to them, because when you offer an LC, you suddenly become a very trustworthy partner to suppliers everywhere. And it can even help their cash flow, because they're not paying up front. They're only paying once the goods are confirmed to be on their way.
And this is the other side of that security coin.
The buyer has total assurance that their money will not leave their account until the bank sees documented physical proof that the goods have been dispatched. No proof of shipment, no payment. It's really that simple.
And this brings us to what might be the secret genius of the whole system. The banks, they don't care about coffee beans or t-shirts or computer chips. They deal in one thing: documents. Their only job is to be a neutral third party that checks if the paperwork from the seller perfectly matches the rules set out by the buyer. By focusing only on the documents, the whole process stays clean, predictable, and efficient, and you avoid all the messy arguments about the goods themselves.
So when you put all these pieces together, you see that the letter of credit isn't a tool that favors one side over the other. No, it's this masterfully designed instrument that brilliantly balances the needs of both the buyer and the seller. It creates something that looks an awful lot like a true win-win. Just look at how perfectly these scales balance out. The seller gets that guaranteed payment and way less risk. The buyer only pays when the goods are shipped, and they get to control the paperwork. The seller gets access to financing to make the stuff, the buyer gets access to a whole world of new suppliers. Each party's single biggest fear is directly addressed by a powerful benefit, turning a situation that was full of risk and distrust into one built on security and confidence.
So, I'll just leave you with this final thought to chew on. In our world of crypto and fintech and instant digital everything, why on earth does the seemingly old-fashioned, paper-heavy system still form the bedrock of global trade? It's a bit crazy, right? Well, maybe it's because at the end of the day, when there are millions of dollars on the line, an ironclad institutional promise is still the most valuable currency there is.